Welcome back to the market update in February 2024. We've got some pretty exciting news as it relates to mortgages and interest rates that we're going to get to you, so stay tuned. So let's first talk about current home price appreciation. Randy, do you want to read what our two analysts have that they're saying?
Absolutely. November's year-over-year gain saw the largest growth in U.S. home prices in 2023, with our national composite rising 5.1%. House prices rose 6.6% from November 22 to November 2023.
So we've had some great appreciation, unlike what most folks are thinking about, that really everything has fallen, which I think is interesting. And, you know, one of the things I love about this Case-Shiller home price movement chart is when they look at a 1 year percent change, some of these numbers were in the red when we've looked at them in the past. The only one really right now is Portland. They're still struggling, but they're less than 1% price movement lower. That's not bad. Everybody else is in the positive. I mean, if you look at Charlotte or Chicago, they're at 7%. You know, Cleveland at 7.4. In our area, Miami, 7.2. We don't have anybody that's really close. Tampa is a little bit further, 3.4%. But we've got some good price appreciation.
Yeah, we keep saying the same things over and over again, but there are fundamentals that back up these numbers. One, we still have inventory issues. If you think about interest rates doubling in the last 2 years to still see this appreciation of homes, I mean, it's amazing.
That is incredible.
Homes are still the best place to invest your money right now.
Without a doubt.
100%.
Dirt is king.
100%.
So if we look at home price appreciation to that point, is 30 years, 297% home price appreciation. You know, 10-year, 103%, 5-year, 54%, and in the last year, 7%. Not bad numbers. Can't get that on the stock market.
I was just going to say the best number on there is 7% return on your investment in 1 year. That's where are you going to get 7% on your money right now without a lot of risk? Like, where are you going?
I can't think of anything,
yeah,
quite honestly. Future home price appreciation, I think, is really kind of what folks are concerned about.
Yeah.
If you look at the average in 2024 of what the analysts are saying, Goldman Sachs says 5%, and we have Realtor.com, which, by the way, their numbers come out a little bit later. So this was as of the beginning of February that we're looking at these numbers. So I'd say their next report, it's going to be a different number. But all of that averaged is 2.7% for 2024. And Randy, look at what happened when we looked at the forecast at the end of 23 and now the current forecast that was at the beginning of February. All of the numbers went up.
Well, there's going to be a lag factor in this. I mean, what happened? The Fed came out and made these huge announcements about rate drops. Minimum of 3 coming this year is what they expect. As many as 6. I mean, so when that happens, all of a sudden these people are going to have to change their forecast all to the better.
All to the better. And when you look at that, Goldman Sachs, they were at 5%.
Yeah.
In the end of November of 23, they were at 1.9. So all the analysts are going up in their numbers. Now, what's near and dear your heart is the mortgage rates. And I really want to go into this a little bit. We've talked about it at a lot of times, but you just gave us a little snack bite of what's happening this year and where it's going to go.
Yeah, and I think, you know, the general public, every mortgage company and bank out there advertises to rate. And I just don't think for the last year and a half or so that we've been in a real rate-sensitive market. It has way more been a cost-sensitive market for rates. But this year, most people are well aware of the fact that anything they get into now is probably going to be touched up, refinanced once or twice in the next 5 years.
Right.
So, you know, they all know that, you know, I want to get that home at the price that I want it right now, knowing that my interest rate is going to improve.
Right. And the Fed is trying to get that spread with the 10-year Treasury yield in line, that they always go up in a recession.
Yeah.
They give us more. That's coming back in line. Everything should be, you know, hunky and dory, as one of my favorite films says, as we go into 2024, as we sit here in February. But what's Odetta Kushi saying at First American?
Yeah, the spread is not always consistent. It actually widens during periods of economic or geopolitical uncertainty, as has been the case in today's market.
spread
Fair.
in that Treasury bill. I mean,
Fair.
we're a little bit further than when we
Yep.
would like it to be. And Mark Fleming, what's he saying?
A primary driver of the increase in the yield over 2023 was inflation expectations, of course, So the higher the current rate of inflation, and more importantly, the higher the expected future rates of inflation, the higher the yield on the 10-year as investors demand to be compensated for that inflation risk into the future.
Yeah. And we've gotten really good numbers back on inflation. At least, everybody's working, so that's good. Mark, did we talk about Mark Fleming? Did he go on? Yeah.
The reason to believe that the rate lock-in effect will ease modestly this year as mortgage rates come down, and you can only imagine if they go below 6, then even more people will be in the money, and homeowners will become less anchored to that low rate that they got a few years ago. We said this a million times. We see 1% come back down in the rates. That's 15 million new buyers back into the market. That means home prices, with our inventory still being short, to be honest,
right.
Home prices are going to do nothing, but that's why you saw the numbers that we just a couple slides ago put in there. The appreciation rate is going to be a lot higher than we had projected last year.
Love that. I know we have a lot of slides here that I'm having you read. Keep on the reading on.
It also appears that mortgage rates are now falling again. They will almost certainly fall below pandemic lows, although we may soon see rates under 6%, which would be low by pre-Great Recession standards. They're normal. We see anything around 6 or a 5 in front of it, we know that we have a healthy economic outlook in our country.
Absolutely. One more I want you to read.
We anticipate that after the past several years of extreme volatility in interest rates, the 30-year fixed rate mortgage will continue to moderate over the course of 2024, moving to a rate below 6% by the end of the year. Everyone says this.
So, by the way, are you getting the drift on what all these analysts are saying?
Yeah.
That we're not making this up. And with this slide that I love, again, mortgage rate projections in December versus January, look at how they've come down. I mean, almost 6-7%.
Yeah, and again, like when I sit down and talk with really smart people, they're taking higher interest rates right now at lower cost, cash to close, because they know they're not going to keep this loan, right? And that's what the smart money is doing. It's just we are not rate sensitive right now, knowing that rates are going to peel back by the end of the year.
As long as you can get affordability.
I mean, it's always going to be a case.
Right.
Yeah.
Exactly. And when we look at this 2024 at the end of Q3 and Q4, the big magic number here is 6 or 5.8%.
Yeah, the market's just going to continue to heat up.
Yeah.
Prices are going to continue to go up. Sellers are going to be back in the selling market again, and there's going to be plenty of buyers for them.
I love that. So let's get to it about what's happening here in Southwest Florida. Well, one of the things I like to talk about, because what I'm hearing a lot on the street is prices are coming down. And I'm not seeing that. I'm seeing them go flat. And our 4 markets, the entire MLS, but Fort Myers, huge market, Lee County, Fort Myers, Naples area, and Marco Island are kind of how I chunk that in. And if you look at all these prices, they came up significantly in 2021, 22, and now in 23 to 24, they're leveling off. So it's not like we're seeing huge, 20, 30% increases, which isn't bad. Like, it's not normal to see what we saw in the pandemic. It was a unicorn.
Well, Mary, just think about this for a second. We've gotten hit with a couple of storms recently. The insurance has, been a bit of an issue in the state of Florida, and home prices are continuing to going up. That's just a fundamental characteristic of where we live. People want to live here. It's a nice place to live. So with all of those factors in place, the fact that homes are still going up, once we put those things behind us, where is it really going to go? Back to what we expect.
Well, they're not bad expectations right now. So, the thing is if you're waiting for that price to go down, it's not going to go down. If interest rates go up or down, prices are going to go up. So it's kind of like jump in because that's what you want for life. Not because you're looking at the best deal, you're looking at flipping it. Jump in because I want this lifestyle. I want a boating, I want a beach, I want a golf lifestyle where it's warm in the winter and I'm going to get out of it and I'm going to bring my family down, which is what is important. Now, the next slide I like to talk about is days on market. And, Randy, I say we have homes that are sitting there way longer than these average days on market, and we have homes that go really quickly less than the average days on market. The reason I like to put this up here is once you get the price right, then you're into that average days on market. So our average days on market are in the entire MLS is 46 days. Now at one point they were like 2. So 46 seems like a lot. And, in different areas, they're somewhere between high 40s and low 50s across all of our markets, Marco Island being the highest number of days on market. Now, the big kicker in the slide, though, I do want to point out is months of inventory. So we're not sitting here at 0 months of inventory or 1 or 2 months. We are sitting at a balanced market. And a balanced market, if you have 12 months in a year, a balanced market between a seller's and a buyer's market is somewhere in that 6 months of inventory. So with us right now, if you look at the entire MLS, there's 6.4 months of inventory. Very, very, very normal market. You've got 5.9 in Fort Myers, you have 6.4 in Naples, and Marco has 8.7. So that just tells me we're in a very stable market with maybe in Marco Island a little bit more of a buyer's market. So we have to price accordingly. That's what it tells me.
Well, you know what? You've been in the business for 15 years, myself as well. So we've seen a few markets. Our challenge always as professional insiders is the super low interest rates that the general public just witnessed a couple years ago.
Yeah.
Or the fact that homes were just flying off the market during that time. And trying to just educate people that, guys, what we're into right now is still better than normal, right? Like, it's not insane, but it's still better than normal. And then just trying to bring them back down to reality a little bit. It's always going to be our challenge.
It is. And, Randy, when I started in the business 15 years ago, it took you 290 days. You could have a baby in the time it took to sell a house. So the fact of the matter is that was coming out of a crazy market at that time. Now we're just in this really stable place. So if folks are kind of worried about, prices falling, Chicken Little, interest rates, all that, I'd say buy or sell if it's for your life. Don't worry about timing everything perfectly, because I don't know about you, I've never timed the stock market perfectly, or for that matter, a house that I was flipping, because I haven't ever flipped a house.
You know what? You just took the words right out of my mouth. Like, the people, there's so much bad information out there to the public. There's so much fear mongering that's going on. There's so much of that stuff that, it's just our job to reel people back in. There are true fundamentals to our economy that are very good. There are true fundamentals to where we live in the housing market that are very good. And it's just our job to explain that and make people educated on those things.
So you heard it here first. If it's your time to move because that's what you want to do for your life, we'd love to help you. We'd love to help you get a mortgage if that's your thing. I'd love to help you sell or buy if that's your thing. But, do what's right for you. The economy and what we're seeing in the market, our hair is not on fire. The houses are not going to depreciate by 100,000%. Mortgages are not going to skyrocket. It's just a stable time. So until next time, I'm Mary Bartis with the Bartos Group of Premier Plus.
Randy Williams with TVF Mortgage.